whenever you see an IS candle, what we do is we pay attention to the high of the candle plus a filter, and 8 out of 10 times the high of the candle is not going to be violated. If you miss getting into this candle, your actionable point is you have to start selling below the low of that candle. So these guys who sold below the low of the candle will start selling with a stop loss above the high of the IS candle, and they have a trade set up for them. These guys who came in, they will start selling below the low of the candle with a high, with a stop loss at the high of the candle, and they will trade for a move down. This is a simple setup. It gives you the advantage of taking information from people who are putting a lot of market orders and are in a hurry to run in the market and execute in the market, right? So this is what we call selling patterns, and the opposite of an initiative selling pattern is an initiative buying pattern, right? So this is what we call initiative selling patterns, and the opposite of an initiative selling pattern is an initiative buying pattern. So this initiative buying pattern will come when there is a lot more market orders which are on the buy side. And when they are on the buy side, you'll find suddenly that these people are buying deep into the market. Now, a lot of us, when we first see an order flow chart, we focus on this candle. We focus on this color of this candle, and our minds are actually programmed to just look at what this color is. But this color, we have to just put it aside for some time and try to understand why sometimes this color is red and why sometimes this color is green, or what really happened between the high and the low over here. So what we are doing is in order flow is we are adding data to a chart. We are adding information to a chart, and we are trying to find out what happened between the high and the low of the bar, or what happened between the open and the close of the bar, right? Now the color of this candle is dependent on the open and the close, right? So if the close of the bar, this is the close. If the close of the bar is lower than the open, the color of the candle is red. Or if the close of the bar of this particular bar is higher than the open, the color of the candle is green, right? In order flow, what we do is we don't pay attention to the information in the color of the candle. What we do is we try to find out what has happened between this buying and the selling. Now this candle has closed over here at 11:15. Why did it close over here? Because it met a little bit of serious buying over here, and that took it from the lows of 51,219 and placed it right here around this 51,275, 280 mark, right? The same thing over here. This color became red because there is a 314 lot seller which came in exactly at 51,412 and pushed this from the high to this close. So what you are seeing is you're actually getting a little bit more information than the open, high, low, and close of the bar, and you're seeing in this important points where the seller is operating and where the buyer is operating. Now a lot of us when we first see an order,
Good evening, guys. Good evening, everyone. A quick sound check. Great. Welcome guys to this evening session. And today we'll be covering option charts and mainly the line charts and options. So let's have a quick recap of how we use line charts in trading options. So let's start with the options table. Let's start with the option table, which has all the option data on screen, and we have the symbols from where we can open any line charts and any order flow chart from the options table. So we can use this timeline to drag to what time we need to watch. So I have taken this back to today's open, and let's start with the Nifty futures and then we'll move on to the Bank Nifty options. So in the Nifty options, what was the gamma zero? We give a lot of importance to the gamma zero because the current weekly settlement inventory is based on that level. So at the open, the gamma zero was at 25,000. So let us just see how we can watch the line charts and how the important references of the POC and VWAP on the options give us some good trading opportunities. So I'm we have the strike price in the middle column and we have the puts on the right side and the calls on the left. So today, because it was an open drive down, we can let's open the chart of the 25,000 put line chart and see how the open interest and the VWAP and the POC were placed. So you just need to open this with a one click chart. You have this column, you have the market profile chart as well as the line chart. So I'm clicking on the line chart and it opens up in a new window. It will open up today's 25,000 put line chart and a quick review of what are the elements which are there in the line charts. The blue, they have been mentioned at the bottom. The green line is the VWAP. The pink line is the POC, VPOC. The blue line is the open interest. And you have the price of the option. And at the bottom, we have the OI spikes. At the bottom, we have the OI spikes, which tell us whether the open interest is adding or coming down. So let's start with today's. What is it that we need to take in consideration when we start? So this was the opening bar of today. So one thing what we need to make note of is previous days VWAP and the POC. So why are we looking at this chart? Because using line charts, we want to see where the writers are getting hit and how they are forced to cover. So which is what is our aim in using these line charts and watching where the option writers get stuck and they are covering and how the line chart gives us that confirmation, and we can trade these using the order flow chart. So before this open today, we can see the POC of yesterday's close was at 60 and the VWAP was around 78. So these two are the important references when we open today. So we take forward and we see how that option is doing at the open relative to yesterday's POC and the VWAP. So what happens? We can see the open interest was kind of rising yesterday. There was a dip into the close, and then the POC and VWAP 78 was the reference and the 60 was the POC. So above these two, these option writers would be in trouble. So at the open, because we had an open drive down, we can see how we have straight away got above these two references. I'll switch on to the order flow chart in a bit and we will confirm that in the order flow chart also, and how we remained above the VWAP and the POC. So not only yesterday's POC, we also need to consider where when the POC keeps shifting even on the daily chart. What I've done now is I'm only seeing the intraday chart. So that is from the open of today. So at the open, the POC also had shifted to that 78 level, which was yesterday's VWAP. And then the POC shifted a little bit higher to 90. So as the POC kept shifting, the price remained above that POC. And you can see how the green line was always below the price. So that means it was above VWAP. So what does that tell us? That is telling us that the writers are under pressure in this strike. So you can see how the open interest fell largely at 9:35, and then it kept steadily coming down all day, and we remained above the POC and the VWAP for the entire time. So this is a very classic example today because we had a strong open. These writers were forced out in the first half an hour, first half itself, and then it was relatively uh, kind of a balance. So we can even see how we can get the targets using these line charts. So what I'm doing now is I'm switching it to a 6-day time frame. So once we get above the VWAP in the POC of the current day or the previous day, the targets will become the higher VPOCs which it had left. So this is the 6-day chart. We can mark these POCs. You can see 9th October the POC was at 192, and then yesterday's the higher POC was around 100 yesterday before it came down to 60 levels. So 100 was one target in this P once we started the rise at the open, and then the higher POCs here was 161 and 192. So these POCs which have been left behind on previous days serve as the probable objectives, and then once we hit this objective we see what it is doing. For example, we had this objective of 160, and once we hit that objective, 160 was showing us change of polarity today after the initial balance. So that was telling us that it is due for more upside, and then it went on to hit this higher VPOC of 193, and once it started to sustain above 193, it was clear that it is headed for the next higher POCs. So this is how we use the POCs in options chart, and we can get the objectives, what the targets could be of that particular strike price. So we have had a check on this 25,000 call. Let us shift to a dual window mode, and let us have a look at the order flow also of this particular option of today. So what we need to do to watch the order flow chart is we have these icons at the bottom right where we have the market profile chart option as well as the order flow chart option. So I'm clicking it on the order flow option, and let us go to the open of today and see how the order flow was what the order flow was showing us today with respect to the POC and the VWAP. So as I mentioned, the first reference at the open today was yesterday's POC, which was at 60, and the VWAP, which was at 78. So in the opening bar, we will see what this option is doing at those two levels. And if we are able to stay above those, we can look for the OI to start coming down and give us a favorable trade. Sorry. So I'm switching this. And as I mentioned, we are looking at the writers being forced to cover. So which is what we need to have at the back of the mind when we are looking at the order flow chart of this chart. So an IS in this does not mean you need to go short, but you need to see what it is doing at VWAP. So here you can see this is the opening bar. This is a 3-minute order flow chart. And right in the opening bar, we can see how we have gone above that 60. This white bold line is yesterday's closing POC, DPOC of 60, which was seen here in this line chart. So in the opening bar, when we are getting above this POC, that itself is an indication that it is headed for this higher VPOC of 100. And it went on to hit 100 in the first 15 minutes itself. At 9:24, you can see we have made a high of 101. So how did we get that objective in this line chart? This is this POC is 60, and the higher POC from where it fell down was at 98. So this is how we can get the targets, and you can see this green line is VWAP of yesterday at 78. So the opening bar itself, when it closed above this POC and the VWAP, it was telling us that these writers are in trouble. So using this two levels and this opening bar's VWAP, which is at 69, which also has zeros in the order flow. So this will be our reference to remain long in this put. And we will definitely part book our positions once we have got into it. And what will be our how we'll keep trailing our stop loss will be based on the next signals which we get. So here you see we have gotten RS plus IS, and this IS has taken support at VWAP. So what do we do? Our opening reference is 69. Even if you have gone long at this point, closing bar of the first 3 minutes, which was at the VWAP of previous session, your stop loss would be 69. And once you part book, your trailing stop loss will be this 78 reference. So once you see this IS bar not able to break, stay below VWAP, it is a very good indication that the writers are still in trouble. So what will be our re-entry or an added entry would be the negation of this IS. So above 105, we can take a fresh long position in this put with a stop loss of this fresh dip at the VWAP, which is at 84. So this is how we can use the order flow chart to keep entering and re-entering the trades. Using the line chart, we know that the POC was at 60 and at the opening bar we got a buy trade, and then we have hit that objective was 100, where you will definitely part book your position because that is one target. 100 was one objective. So once we do that, then we see what the option is doing at VWAP. At VWAP, if we are sustaining, if we would have got an IB, we would have it would have been a very easy, clear entry trade. But here we got an IS which was taking support at VWAP, and this IS did not give any follow up. So it never broke this low. So once we got above this IS, it was a fresh long trade with stop loss at the lows of this IS. So we can see again zeros here. So when the writers are covering, you will see a lot of these kind of order flow bars where you have zeros in the middle and it's a big green bar. And then what happens is the POC of that bar becomes an important reference along with the zone of zeros. So here this 125, the POC became our latest reference. If you are long above this, you will again part book and then trail to cost. And then once you have this, you can trail your existing position to this 125. What will be our higher targets? We saw this in the previous days sessions POC. The next level above 98 was 160. So using the line charts, we know what the targets are, and using the order flow charts, you can keep trailing and you can keep entering again. Whenever you get a fresh entry in the order flow, you get back in and you. So you can see how above this 100 level, our next higher POC was this from 11th of October around 159. So that 159 would have been our next target. So once that 159 is hit, then we can trail our stop loss to this new POC of this green bar, which is 144. So this is how you can keep trailing, and then our higher target would be this 192 if we are sustaining above this 159 zone. So keeping 144 as your trailing stop loss, your next target would be this 192, which it went on to hit in a swipe to 205. So this is how you know these are the objectives and these are the trades you can take, and this will be the target, and you can very clearly trail them with the order flow levels which are left on the chart. So as you can see, this 144 was not tagged for the rest of the day, although, and we can use that information. This was a big RS bar, and this also became the IBH, the first hour high. So any dip to this 144 level was a buy in case we are getting some RB signal in the order flow. So this, you can see, this was an RB. This bar was an RB. So once we get this IB, we can look for a trade back to this 204 level. So with that POC as our stop loss, but again we got this IS here, but still you can see how this IS stopped right at this 144. So just like what we saw in the morning, the negation of an IS is a fresh entry into the long side in that option. So you know we are above VWAP, you know we are above the POC of the day. well above that, those two references. And here this NPOC of 144, which was the last green bar which we got, is holding, and we have got a RB, not an RB, and IS. So what we do is we wait for this IS to get negated, and above this IS we can go high, go long. So you can take a long above this 177 POC, with your stop loss would be this 148. And you can see how we went on to get above that and gave new highs for the day. So at 177, if you enter with a stop loss of 148, you definitely hit your 1:1 target at this level. So here you will definitely part book and trail your rest of the position to cost, so that you don't uh, lose out the money you have made. The profits are intact. So you can see how that 177 held throughout the day. In fact, this NPOC which we left at 187 was not tagged again. So this was a very safe trade you could have carried into the close in case we got a fresh move lower in the K, or we trended down in the L and the M. This would have given you a fantastic return for no risk at all, because your stop loss was at cost. So it did go on to make new highs of 243, but it again came back and closed around. In fact, 250 was the high it made, and it went on to close around the 250 mark itself. So this is how you can hold on to some good trades, and you know from the line chart what the objective would be. So for example, this 192 was the last POC. So into the close, once you are thinking that you need to tighten your stop loss, this 192 would have been a good reference. So what entry we got at 177, a part of that position could have been held with stop loss as 192, and even if you wouldn't have booked at this highs of 256, you would have got a close around 250 level, because we closed spot today at 24750. So 250 is the close in this option. So this is how we can make use of the line charts, and you can see how the open interest has fallen. And even if we see the last settlement, the entire settlement cycle, the open interest was the highest on the 16th of October, and then we kept on falling today. So this is how we can use line charts and make use of the POC and the VWAP, current POC and the VWAP, and the previous day's POC and the VWAP, and POCs of the option at higher levels, which will serve as our targets when we are getting a move. So this was the 25,900 put. So because it was an open drive and we kept falling, even the 24,900 call put writers were in trouble. So let us just see the line chart of the 24,900 put and see what information we are getting from that. So here, same, this was the open of the day, and you can see at the close the POC was at 28 and the VWAP was at 47. The same information we can even get from a market profile chart of the option. How do we get the market profile chart? We just need to go back to the option table. In one click, we have the market profile symbol, and we open that. So I'll keep today's day off. So in the market profile chart, what we see is this. The POC was at 29 and the VWAP is at 46. In fact, in 24,900 put, you can see we have overlapping VWAP from the last 3 days. So the writers were entering, and the VWAP, this overlapping VWAP of around 47 was their pain. If we sustained about this 47 level, all the writers of the last 3 days, in fact, we have a selling tail on the 14th, would have got into trouble. And just like how we were seeing the objectives on the upside, the POCs, these POCs would have been our targets. These unvisited POCs, 115 and 215. So this is how we get the objectives and the VWAP also of the profiles which have not been tagged. So this we can do it on the market profile chart as well, and the line chart. So if I see the last 6 days of this 24,900 put, and we'll watch where the POCs were. So you can see the POC of yesterday was at 28 The higher POC of yesterday was at 70 from where it fell. And then we have these higher VPOCs at 118, 129, and this from the 9th of October, which is at 145. So when we get a move higher, these will become our targets. So you can see the opening bar, the open interest was in fact rising here. The put writers were adding up at the open, unaware that we have got an open drive down. So you see here the open interest at yesterday's close was 1,73,000 contracts, and then after the opening 15 minutes we had 2 lakh of increase in this. So this could have been the 24,900 straddle being written, but whatever the case, these put writers got hit because immediately the auction got above this POC and VWAP of yesterday and remained above the VWAP and POC of today. The POC of today was at 40 and it did not change. It remained right there. And you can see how it went on to hit the higher targets of 70, which we even saw in the market profile chart, 70, 114, and then this HVN of 165 was what we were looking at. So this is what it hit. It made a high of 159, which is where the highest POC from 9th of October was. So this is how we make use, and you can very clearly see, I'll just have the intraday data so that we can very clearly see how the open interest is coming down, giving that confirmation that the writers have got stuck. So the open interest had hit a high of 3.65, and from there it started to fall. Why? Because we got this big green bar at 934 at the POC and VWAP of today. So which forced all these writers to cover. And as it kept uh, sustaining above VWAP, you can see this dip at VWAP where it did not sustain. This was a fresh move which was telling us that we can continue higher. And we went on to hit the higher POCs which we had seen. So the same chart, let us have a look at the order flow and do what we did with the 25,000 put. So how do we, what do we make of these POCs once the option it is relative to all instruments, even in Nifty futures or Bank Nifty futures, even in the spot, once we are above one certain POC and we are sustaining above a POC, we are looking at the higher POCs which are left as our targets. So it goes the same on the options also. So you can see how when we are sustaining above this POC, our next target would be this 70. And if we, when we sustain above the 70 POC, then the targets would be the higher reference. I think we had 114 and 159. So which is what we hit. So I'm just switching the order flow chart of the 24,900 and see what we did from the morning. Also, another point I would want to stress here is because we are looking at line charts to see where the writers are getting hit. So obviously, when you're writing an option, you want the option to remain below the VWAP and give the premium needs to keep falling. So option, whenever an option is above VWAP, it is certainly not a good idea to write that particular option. So that is one key thing which we have and which we make note and which we use. So that VWAP is a very important reference, and not just the current day's VWAP, but also the previous day's VWAP, because it gives us the reference above which yesterday's writer's option writer would be in trouble. Because yesterday the gamma 0 was at 25,000. So this 24,900 put was being written. So this is the order flow chart, the opening bar of the order flow chart of 24,900 put. And as we saw this, it opened above this POC and the VWAP was around 46, where initially it gave an RS and an IS, but you can see how it did not sustain it, although it closed below the VWAP in this bar. Immediately it got back above. So negation of this IS and the getting back above VWAP is forcing these writers to come out. So this is the signal which is confirming that the writers who had gotten from morning, you can see this bulge of 3,65,000 contracts, will now be forced to cover. So you can see how this, because the open interest is a lagging indicator, order flow will give you the signal first, and then you will see that caught confirmation in the caught also. You can see there is red caught even here, but then you can see this 1 lakh of green caught, 34,026. These are all writers who are running for cover. And once it got back above this IS and the VWAP of previous day, the higher VPOCs were our targets. So the higher VPOCs we have already seen. And what do? We here this white bold line is today's POC. So once we sustain above this POC, we are looking at the higher POCs as our objective. So where were the higher POCs? The first higher POC was at 70. So 70 was our target. So if we sustain above 70, then our next target would be this higher POC of 115. So this goes on to make a high of 114.9. So you can see how precise the levels are when we are following these line charts and the POCs it has been leaving. Why they are precise? Because volumes had been built over there, and from there was a section of writers who had piled up and made it to come down. So at all those levels where the volumes were concentrated the most, they will again be forced to come out. So this is what has happened here. 115 was that reference, and after this we did get a dip, but as we saw, you can see how we have held the VWAP. We did make a dip below this VWAP, and see here we've got this IS. So again you can look at the negation of this IS as a buy signal. So we wait and watch. For example, if we had gotten IS at this VWAP, then it would there would have been no more long side bias for this option. But here we have left a dip, and this POC of that IS bar can be our aggressive entry. If you're an aggressive trader, you can go long even above this with a stop loss of this 61, or you can go long above this 92 with a stop loss of 61. What will be our higher target? Because we have this 115 already hit, we will have the upper POC which is at 129. This 115 was here, 129 is here as our first objective, and then we have this 145 as our higher objective. So here you can see once we got above that IS highs with that VWAP as our reference, you can see this NPOC at VWAP has not been tagged. 67 held all through the day, and we have gone on to hit that 129. 130 was the high we made, and then because we sustained above that 115, then our next target would have been that 145 level. So you can see these NPOCs have been holding, and how we go on to make a high of 145. So this is how we look at trading these line charts, and the open interest is showing us the writers are running for cover, and we have been above VWAP all day. So this is how we use the option charts, and we make use of this NPOCs and VWAP in the line charts, and with confirmation in the order flow of the current data, we can take some very good trades. So the same thing we can look at, because if you come forward, the gamma 0 shifted to 24,800. So let us see what was the open interest in 24,800, and you can see in this option table at the close, it tells you, it gives you the picture of where the put open interest was at the highest. So for 25,000, the max OI was in the morning 924, which was 3 lakhs. And then it fell to 83,000 into the close. 24,900, you can see max OI was at 933. So 25,000 put writers started coming out right at 924. But the 24,900 we saw the first 15 minutes, the open interest was rising. And yesterday's open interest was only 1 lakh change. 2 lakhs of open interest was added in this first 15 minutes. From 9:15 to 9:33, we added almost 2 lakh of open interest. So that open interest was not seeing what was happening in the order flow because we were driving lower. So they were blindly getting into this. Yes, it could also be that they were writing the straddle, but nonetheless, this leg they had to cut out because it spiked higher. Same thing, 24,800. 24,800 kept rising even till 12. So the highest open interest was 7,76,000 in this. So let us see if these writers also got a hit because they were the ones who were writing. So we are opening the line chart, and here you can see how the open interest was rising for the first half of the day, and then it again gave us rise in the second half in the G period. So what we are doing here is we are, although it was just balancing at the VWAP and the POC, but still this laggard open interest which was coming in were forced to exit because here we got a move above the VWAP and the POC and we made a high of 55. So you can see how the open interest which added below the 50, this level were forced to cover. So these red spikes are indications of open interest coming out. These green spikes are showing us that the writers are adding. So, and 24,800, because it was the gamma zero, even the call was open interest was rising along with the put. But because we remained above the VWAP of this, these writers were forced to cover. So from a high of 7,61,000, we came down almost 5 lakh open interest it shed because it remained above this POC. But I'll just open the 6-day view of this chart. So here again, so these were the targets 32, and here you have that 46, which we have closed at. 46 was one reference, and then the higher targets would have been this 78, 82 level, and the max would be this 112. So in case we had got some more fall in the closing periods, we could have looked at this higher POCs as our objectives. In fact, we were discussing about these targets in the room, and we are looking for a move above the 50 level in this, but it just managed to hold that 50 zone and close right around that level. So this is how we use the line charts, and in options it is all the more beneficial because it gives us so much of data in one screen, and it gives us all the objectives. So it's a very good way of trading options and looking at when we are getting Dukan trades and when you are you can make use of them. You can see how the open interest was piling up today and how it was forced to come out. So this is as far as the Nifty is concerned. Let us now have a look at one of the Bank Nifty options before we can wind up for the day. So Bank Nifty started a new series, new weekly settlement. So the opening, the gamma zero was at 52,000. So we had formed a 2-day balance in Bank Nifty, and the context was we could get a move away from that balance. In fact, we were expecting that move away yesterday after we made the Gaussian curve on Tuesday. But yesterday was a silent day where we remained in previous day's balance. We made an 80% rule on both sides, and we formed a very nice 2-day composite. So we can just have a look at that chart. So whenever we have that kind of a bell-shaped profile, we need to be ready for a trending move at the open. So this is the nice 2-day balance, and you can see the value area low of this 2-day is around the 52,000 level, and the value area high is 52,150. So what when we look at the options table and we see the gamma 0 at 52,000, so we know that if we are getting a move to the downside, these 52,000 writers would be in trouble, the 52,000 put writers. So we then can have a chart of that option open, the line chart, and see what could be our probable objectives. So here you can see the VWAP and the POC was at 410, yesterday's POC and VWAP. And if we look at the last 6 days and see what the higher objectives were, we will be able to clearly know what our targets would be. So this 410 was yesterday's closing POC. Above this, our targets was this POC of 494 and then this higher POC of 555. And then we have VPOC at 794 and 893. So you can see how this option has made a high of right at this 893 and stalled there. So this is how we can look at even the targets of what the option can do. And this series is still on. And for tomorrow, if we sustain above this POC, our targets would be this higher VPOC, which is at 993 and 1154. This is for the 52,000 put. So this is how we can make use of this excellent feature, the line charts as well as the order flow chart, and match it up and get some good trades. I'll just put the order flow chart of this option so that we can just see what the so I'll just increase this PPR to 2 and see what trades we got in this particular option. So one thing, as I mentioned, we need to keep previous days VWAP and POC as a reference for the open, and then see what the open type is doing there. The open type is the first 15 minutes, and if we are sustaining above the previous VWAP and POC, we know that that option can give us more upside, and the higher POC VPOCs would be our objectives. So this is the POC of yesterday, and this is the VWAP. So you can see how we in the opening bar itself we opened above both of them, and we remained above that level, and we went on to climb higher. So this became our reference 478, which you can use as your trailing stop loss. When you have a trending move, these POCs give you very important references. You can see this 478 has not been hit entire day. Even this 546 has not been hit. So you get this fresh IB, you make the POC of this particular order flow bar as your reference. So you just keep trailing with those levels. And in fact, you can use them for multi-day holding also. So this 600 is a important swing reference even for the next few sessions. So this is how we went on to hit these targets. Once we are above this 555 and we have left a NPOC there, it tells us that we can look for the higher target. You can see how we hit that 555 reference here of this VPOC, and we have left a POC, fresh POC at 546, IB bar POC. So you know the higher targets would be this 798 and 894. So holding that as your stop loss, see if you have able to get that. 794 was hit in this bar, and then 894 was the next objective. Although we did get a dip, the dip held that 600 and 555 level. And here again, you have a negation of IS as your entry back into this move. You can keep a stop loss of this NPOC of 674. Go high above the 720 level with a stop loss of 670 and look for that higher POC of 890, which was hit with this RS bar. So this is how we can use these charts, both the line as well as the order flow charts. And the line charts will not just give you the indication of when an option writer is covering, but it will also give you the targets you can look for. So this is how we make use of them and have them handy, and they work very well. And when you have moves like what you had today, although we didn't get any Dukan trades in the second half or the K period, the opening of the day was enough for getting to know what the targets was. So that is it from my side for now, guys. In case there are any queries, please feel free to post them. And you can also ping us on X. My X ID is @Uttam Goyal. You can DM me. My ID is open. And in case you have any queries regarding any of these features or any of the sessions which we have discussed so far, we would be happy to answer them. So we also have a live trading room, the VTrender mentoring room, where we trade together. We look at these charts and we look at the options we can trade, and we look for some favorable setups. So in case you are serious about uh, using them on a daily basis, you should try that room and then look at how we place. We have an audio session every day at 10:30 where we discuss the open type. We have a look at the options which we can trade, and then stay connected through the text chat for the rest of the day. Yes, Shiva. Shiva has a question about the weekly FA. We did confirm this. I in fact mentioned this in the trading room also today, and the 180R target is at 24677. So in fact, we were looking for that objective to be hit today. So the 25212 will be one swing reference going forward in Nifty spot. Manish has a question. Manish, we look at the gamma 0 level. I showed that in the option table at the open. The gamma 0 at the open was at 25,000. So this means at 25,000 was attracting writers both in the call side and the put side. So when we have an open which is to the downside and our bias is going short, then we'll look at the put writers because they are the ones who will be forced to cover. So the gamma 0 will dictate which option you want to look when it comes to option writers, Dukan trades. In fact, we can also have the straddle line chart open. I'll just show that we have this middle column where we have the line chart of the straddle, and we can even see till what time the straddle was going up. You can see how the straddle chart kept rising till 11:30 because they were blindly writing because their gamma 0 was at 25,000, but later they were forced to cover one leg, which was definitely the put side leg, because they were the put was moving higher and higher. So the same principles apply in the straddle charts also. You have the open interest, you have the POCs and the VWAP. Although you don't need to necessarily go long in a straddle because we know which of the leg in the straddle is giving the move. So you can go on to trade that particular order option instead of trading the straddle. So here you can see this 150 and this 230 was the targets, higher POCs of the straddle which was left behind, and the 267 and this 304 were the higher targets. But we went on to hit this first target and this second target. So, but as I mentioned, straddle is a combination of the call and the put, and this OI decrease will happen only when there is a trending move. So when there is a trending move, it will be only one of the writers who have got hit. So you can trade that particular chart using the line chart instead of the straddle. So these are the Dukan trades, Manish. What I discussed, what we showed, Dukan trades are nothing but looking at setups where the option writers are forced to cover. So that is it for today, guys. Hope this was helpful, and you can make use of this feature in the coming days and make part of your trading arsenal. So thank you for joining in and signing off for now. Have a great evening and let's catch up in the market tomorrow.